crack this thing open. All right. Oh, that's good stuff. Sonic Neuro. It's good stuff. Okay, so we are back. Had to take off for a little bit there, but no worries. Back to normal. Everything is honky dory over here. We got our charts back up. Things are looking good. Actually, PNB has just decided to just continue to go up. So, you know, we may not get this retrace, and that is absolutely fine. And if that's the case, then we move on to other trades. So, but this is interesting because this particular move right here, very little pullback, right? Just barely the 382. More like traditional markets where you find that 382 support more so than you do, let's say, the 618. Crypto generally has deeper retraces, or deeper pullbacks, I should say. So in any event, it's looking pretty healthy. it's looking like it's doing its thing. We can actually take from, let's say, from that last one. Let's say if we got a target on that going the other way, I want to see where this actually ends up here. So we take a let's see, we take a reverse fib here. Let me get this puppy over here, give or take, and let me get this guy, cut him where that bottom was. So what I'm doing is I'm measuring that first move, and I'm getting an idea for after that first move from the reversal. What are we seeing? And look at that. So where it stopped, right? Where it got stopped out over here is the 2618. Okay. So, if you were trading off of this, you would be looking at your next target, 3618. If this continues to move like this, and I'll be totally honest with you, I was expecting more of a pullback here. And it doesn't look like it's happening currently. It could do a little double top over here and then come down, but it's looking healthy for now. Volume's good. Momentum is certainly on BNB's side, so it's pretty cool. It's pretty cool. If you're in that trade, congratulations for sure. All right, do have a, well, let's see. Oh, of course, I'm on the wrong screen. Yep, let me do this. Let me move this over here. I'm going to answer some questions and stuff, pull up some charts, do a few things. Let me get this going so I can actually see what I'm doing here. There we go. That's a little bit better. All right. Let me refresh this while we got a second. Let's let that reload in the background. Let me pump this back over here. Get that chart back up. Very nice. All right, and we are live. Okay, very good. And yes, LBPG. I'm here. Yes, don't worry. I didn't leave you. Well, I did leave you, but I came back. As I said I would. Yeah, so talk to me. What do you want to see? Do you have questions about something specifically? Let's go over those. Let's pull up some examples, some charts. Let's educate. Let's see. First, let's see what's shaking while you're typing over there. Let's see what's shaking. Earlier we did 7-day, and because of where we are in the week, I do like the 7-day. We're Friday rolling into Saturday in America, so it's nighttime trading for us over here. So this is why I pulled up the 7-day, because we're gearing towards the weekly candle close, which is coming up for me Sunday night, and right now it's currently, I guess technically, Saturday morning. So we're getting closer and closer. Okay, you run through your typical start process. Yes, you're talking start process for what I would do if I'm going to sit down and get ready to trade. I would imagine that's what you talked about. So if it's not, just shout it out. Let me know. Yeah. So what I've incorporated into my workflow now is the price action scanner from Trading Room. And like I was saying before, this gives me a very quick and easy way to see what's trending, how it's trending, what kind of peak gains we've gotten in a certain time frame, and what kind of pullback. Yes, okay, very good. And what kind of pullback we've already seen. So, for example, anything. BitTorrent BTC in 7 days has gained 208% max, right? That was the peak gain. So 7 days worth of trading, that low to current time right now, it's peak, it's high, 208%. And from that 208%, it has since lost 52% of that peak gain. So now BTT is creeping up on that airdrop. That should be coming on the 11th. The snapshot, I believe, is at 6 million, 6.5. I don't know, something like that. You'd have to look it up to get the facts. But we're creeping up on that. So obviously there's a lot of interest in what's happening with BTT right now, and of course with its counterpart Tron. So my typical workflow is I pull this up. Now, depending on the day and depending on what style of trading I'm looking to do is what's going to determine what I look for here. If I'm looking for a quick scalp, I might throw the 12 up, and with a 12-hour chart, I can go to peak gain, see what's moving, what's actively moving just in the last 12 hours. And that'll really harness or get me to the right chart so that I'm not wasting my time looking at all these other charts for no reason. I can see what's moving right now. On top of that, before I go to the chart, I can decide whether the trend is even in my favor and it's something that I even want to look at. So let's say I'm just trading Binance, right? I can't short on Binance, so I'm not looking at something like this. I'm not looking at peak drops, right? Unless I'm looking for a reversal, right? And then I want to buy, buy on the short side. But I want to see what's moving right now. So I gotta wait. Of course, I gotta wait for the computer to catch up, which is aggravating in the least, but it's fine. But anyway, this is the other view, so you see the peak drops. But I'm gonna go for buy, and what I'm looking for these days for this style of trading, I'm looking to capture an entry on a pullback. Amongst other things, but that's one method that'll get you into a trade, possibly during trend, which would be ideal. So at least you have the trend on your side, and then from there you want to try to catch, a couple percentage points up, depending if you get one out of accumulation or you get one that's been ranging for a while and you got a nice breakout, then you could be looking at some serious gains. So I'll start with this and I'll say, okay, what do we got? Peak gains. I'm looking 12 hours. So in the last 12 hours, right, this is what we have going on as far as peak gains. So I like the bigger moves. So I'd be looking at, basically 19 and up. But BTT, I'm staying away from for now. One, not enough data. And two, it's just too new. So it has no valid price history to it. So that's something that I'll stay away from. This is somewhat low market cap. 16 million is a low market cap, but it's not like when you get into the fours and only 87 Bitcoins being traded, then you got to say to yourself, well, I might never get hit here. So I can almost avoid all of these charts and just not deal with them if I'm looking at this shorter time frame. So I would say these two right here. So ARC BTC and CBC BTC. So the trend, right, is what I'm looking at. Now, let's take CBC BTC, for example, on the longer time frames, right? 4 hour and up, 4 hour, 6 hour, 12 hour, and daily, right? These three are bearish or sideways with bearish tone, while the daily is in a downtrend, right? But it's picking up steam, right, on the 15, the 30, and the 1, sideways with a bullish tone. Okay, so this is a possible indication. Now the 5 minute is pulling back a little bit, so we'd have to take a look at that chart to see if this is trading that looks like it's going to trend towards a dark pink, or if these three are trending to take over and pulling this out of a downtrend and into an uptrend. So I'll take a look at CBC BTC and we'll see what we see. CBC BTC, we'll pop that up and we'll take a look. Okay, so once I have the chart open, I do a few things kind of right off the bat. I go to the weekly. This is a personal thing that I do. I'm sure other traders do it, but I want kind of a global picture. I want to know what is this thing doing? What kind of coin is this for starters? And what kind of price action has it had in the past? So we can see Binance, this particular coin doesn't have a ton of history. It looks like we're going back to May of 2018. Clearly a downtrend all the way across the board. But I do like this. I do like this range area here. This is nice. So for me, I look at this as an area for a breakout. You know, I want to break out of this range. So I might do something very simple, and I'll just grab a box, and I'll say, all right, what's kind of like the bottom of the range? It's good, and then I don't want to give it too much, but I want to give it an allowable distance, and by that I mean, you know, I don't want to draw the box all the way up here. There's no reason. You know, there's not a lot of trading going on up here at all. So this, to me, is a little bit more of a range. So once I have that going for me, I'm going to swing over to the daily. Now, once I'm on the daily, now I can sort of get a better resolution on what's happening here. I can say, all right, when I bump this up, now I can see what's really going on. I get these big spikes over here. So this is a pump to a dump. And this is another big pump to another dump. It's basically 100% retracement. All right, so you had this big move here, and then you lost it all within a few days. Trading came up a little bit again. Now you're making new lower lows. You tested levels up, right? Previous price action, so you tested this level up here, came back down. Now you got basically a double bottom. All right, you didn't quite make the double bottom, but it's in that zone. You try once again, and now that's 1, 2, 3 times. You couldn't get past this level. So for me, I'm saying, well, this is clearly an area of interest because we have not been able to get over this level and hold it for quite some time. Ever since the drop down, this was the last time we were up over it. So I'm going to mark that down. I'm going to say, all right, that's an area for interest for sure. Now I'm going to take a look. Okay, we came back up. We got rejected. We came back down. Now we made a double bottom. So even though it's part of my range, I'm going to throw this on here like this. And it doesn't have to be... Oh, what is that? Get that out of here. It doesn't have to be super accurate. I quickly go through some charts to get ideas. Just visual ideas. Is this something I even want to spend time on? Is this something I even want to chart? Maybe I do, maybe I don't. So I try to go through pretty quick, and then if I'm going to get into it, then I'll spend a whole bunch of time on it. So now that I have these two levels, I say to myself, I'm in this range. We had this big move up, but we couldn't capitalize on anything, right? Nothing happened. So I go back in previous history. So well, last time we had a big giant candle like that, we lost everything. Say, all right, so what do we got? We got another big giant candle. We lost, right? Another big giant candle. We came down this little sideways, and then price action ended up moving back up. That's not too bad. But this looks like a little bit more of a pump and dump coin than something I really want to trade. Right? I mean, look at these candles. You kidding me? Right? It's a monster candle. Let's just measure that out. All right, so we're looking at, what is this? It's 132% move up. Okay, this is on a daily chart. And the very next day, we were down. I mean, that's got to be 85%. might as well throw this on here and see what happened. So let's do this. We get our fib out, right? This is just a standard regular Fibonacci retracement tool, nothing crazy. Obviously broke down the 786, back here. So you're talking probably 90%, I would imagine, right? It's got to be in that ballpark. I think if I could do this backwards, we should be able to get a better idea. Let me double check if that's the way that's going to actually work. No, because that's pulling from price over here. So, but that's fine. Anyway, this would get me out of this chart. right? So, I try not to spend too much time on it, but I would look at this chart and I would say, yeah, this is probably a coin I don't want to trade. All right, these two a little too nasty. Now this could be fat fingers. Okay, somebody could have left orders up here for whatever reason. They might have missed a few things. So I may come back to this at some point. I might even put a low risk trade if I see a good breakout. But now here's the thing. We're trading underneath this line here, right? Which 1, 2, 3 times failed to close over. Even on the breakout of the range, we failed to close over. In fact, we're well under. So I'm not doing anything with this. All right, nothing at all until we break up and close out of here above this line, so above 1539, and on top of that, I want to see it out of this range. I want to see it just completely out of the range. Now we could almost draw 2 separate ranges here because it looks like for the last, since December 14th, we've been in the lower portion of this range, and this was a bit of a step down. Right, so you came down, you came back up, you sort of treaded the water here for a little bit, you made a new lower low, and then from there you were just kind of hanging out in this ballpark. So this is something I wouldn't even mess with. Certainly not in its current state. Now that was CBC. So ARC, let's take a look at that trend, right? So you got a strong uptrend currently on the 30-minute chart, and then you have sideways, slightly bearish on the 4 and the 6, with sideways, slightly bullish on the longer time frames. All right, so the 4 and the 6, a pullback in the 4 and the 6 is a little bit more dramatic than, say, a pullback that was happening in the 5 or the 15-minute chart. So you have to take this for what it is. This may not be an optimal setup, but let's take a look. Peak gain was 44% up in the last 12 hours. That's pretty significant. And since that 44%, we've lost 43% of those gains. So I'm going to pull this up, ARC BTC. All right, so obviously I've been on this chart before. Let's pull the weekly. Yeah, who knows what I was doing on this thing. Okay. All right, yeah, this dates back. So obviously I haven't looked at this chart in a while. So let's see, what was I thinking though? It looks like I just seen a little channel over here. That's great. All right, so it respected the channel until it didn't. So we could just get rid of this guy. No need to leave it on. Right now it's just in the way. Let's see. We had ourselves a bit of a triangle here. All right, so had a descending triangle. The issue with this pattern or this particular triangle is it hovered this bottom so much. If it came down and then tested, I would like it a lot more. But to come down and then just kind of hover in the bottom a little bit of a rounded bottom, which was nice, which is good for long-term reversals, which is great. But it couldn't withstand. So it dropped back down. It made a low. Now that's the all-time low. Yeah. So it made all-time low, basically a double bottom. So some people were probably looking along the double bottom. It came back down, almost tested again. So we talk about 3 times, and this is what we're looking at for current. Now again, this is on the weekly chart, right? So this is not the daily chart. This big move here, this is what we saw. That's that 44% gain. So now we want to zoom in and get a better idea on what's happening here. So this, we could say, right, is a bit of a range. You know, actually this whole zone, yeah, this whole zone is like accumulation. So this is your trend. Your trend was down, right? And then you had accumulation. This whole area here. It's just sideways price action. A little up, little down, little up, little down, little up, little down. Now, if we look at trend, we could say, all right, well, it's definitely in a local uptrend. We know that by how it's trading, right? So you have higher high, higher high. Well, this failed to make a higher high. Higher low, higher low, higher low, and over here. So this is where we broke trend, right here. So we were in, you know, a local trend. Right there is where we broke it, right? This needed to be a higher low, just like this needed to be a higher high, and it wasn't. Now we have a higher high now, but it's a little too late. So I would do something like this. All right, for me, this gives me an indication that we had an uptrend. You know, we were doing this, and we lost it. So failure to maintain the uptrend, right, was enough to lose it. So basically, this is your support line, and we dropped down. We lost it. We lost support, but you did come right back to it. So now it's an opportunity to look for it, and we'll see. We're going to see what this move is right here. So this big move, we want to get a better idea on what we're looking at. So for the whole move, currently we're trading down under the 618. All right, now you're finding a little bit of buying going on over there. So something like that, I pull up like a 1 hour chart and I just get some more detail. You know, you figure like kind of look at zooming in on charts like looking at a picture with detail. You know, so this way you're totally zoomed out. You're on the weekly chart. You're on the monthly chart. You're that macro view, right? You could say, okay, obviously downtrend, right? Nothing special going on here, but that candle represents so much trading, just an unbelievable amount of trading in a monthly candle or in a weekly candle. Same thing with the daily, right? That daily candle represents 24 hours of trading. 24 of these candles, represent one daily candle. So this is like taking a picture and zooming in and clarifying, the detail that's in there. So that's what I like to do. That's my here's my explanation. So I'm going to take this. I'm going to go back. I'll show you right now. Right, we'll go back 24 bars. Okay, so this amount of trading. Now, of course, you would have to go to daily candle close, but I just want to show you the amount. Right, that's a lot of trading. It's a lot of trading. From this candle over represents 24 hours. So it's a lot of trading that could happen. And when you're looking at a daily chart, you can't tell what happened. You don't know what happened here. What's the story? You couldn't tell me the story. Did this trading happen first thing? Was it 6 o'clock p.m. Central Time? Trading went all the way up, and then for the next 23 hours and 59 minutes, it just hung out over here? Or did it slowly work its way up and up and up and up over the course of 24 hours? And then at the last, 10 minutes, it was a massive sell-off and momentum was huge, and that's what printed this candle here. So that's why I like to at least get an idea of what I'm looking at, get an idea of what kind of price action is going on, what that coin is actually doing, and then zoom into a level that'll at least give me the detail that'll tell me, what kind of trading was happening. So that's what we're going to do. We're going to go into the hourly and we're going to say, well, this is the kind of trading that was going on. Now, this paints a different picture, this guy right here. And why, right? Why do we have a different picture? Well, because this is probably the 618. So let's get this guy out of here. Let's put a new guy up. We're going to take the bottom of this particular move, right? So the bottom of this trend is right about in this ballpark, and we're going to come to the top of that move, right? So bottom, top, and then these represent how much percent we've lost. So at this point here, we've lost 23% of this total move, 38.2% of the total move. So look at this. This is good. So we look at the trend, bottom, top, and look where price came down to, right on the 618. And what did it do at the 618? It had a positive reaction. A positive reaction. Okay? So, if you were to look at this move, if we were to have seen this over, that's the wrong way. If we were to seen that move, right, earlier, then we would have been over here. We would have seen this move up, these two moves up, and we said, well, let me throw a fib on there and see what we got going on. And if you were into that trade, if you had some confluence from other things, maybe volume, maybe EMA, maybe old support resistance lines, you might say to yourself, you know what, I'm gonna throw a buy order in at the 50 and throw another buy order in at the 618, and I'll just keep my stop tight. You know what I mean? I might just go to the top wick right here, or all the way down to the 786, but that means I'm probably risking less capital on that trade. But let's say I went for it, right? And you know, my targets are just going to be easy, right? I'll front run a full retrace. Not going to go for a 1618 or 127, 1414. Not going to go that crazy because I'm, you know, it's a little suspect of a trade to begin with, just because. So in that case, you would have been okay, right? You would have gotten your fill. Obviously, you would have gotten your fill on the 50, but you would have gotten the fill on the 618. Would have traded up. You would have seen some gains. Said, well, 382, that's cool. 236, you could pull profits if you want. You didn't make the full retrace, but what I do, I front run trades, meaning that if everybody's targeting 15411, not me, it's cool. I'll target 1500 or 1499. I'll let the other guys find the top. I don't need to find the top, and I don't need to find the bottom. I like to trade the 80% in between, and that's where, you know, that's where the good trades happen without risking, you know, being the last guy or the last man standing, saying, oh man, I'm the guy who sold the top. Or I'm sorry, I'm the guy who bought the top, right? And then it dumped. But this was a good move. This was a good trade. Now, since then, you say, well, what else happened? And we came down, right? So now we're going to call this a double top, right? So if we take our tool out again, we can measure from the top here to here, and it's 0.9% difference. I'm usually cool with 2%. I would imagine that that's a personal preference. I don't think there's anything technical about the tolerance, but I'm cool with 2%. And basically, if a move is within 2%, and when I'm talking double top, double bottom, I'm pretty flexible. You know what I mean? This isn't it's not a double top. I mean, let's be real. And we're on the 1 hour chart, so it's not like it holds too much weight. But I would look at it. It's something to factor in, and I'd say, okay, well, yeah, double top, that's not good. You know, with failure to make a new high is not good. Let's see what happens. Let's see if it finds any support on our fibs. Right, it came down and found support at the 50. Nothing convincing. This is all sideways trading. Nothing convincing. Ended up painting. It's a little bit of a hammer, but. Not really, and inverted hammer. I'm sorry, but yeah, a little bit, and you'd like to see that at the end of a downtrend. You like to see, all right, a little bit of push up, okay, failure, but the bulls were active. You know, they let you know they were there, they were buying. Sellers were a little bit stronger, so they closed that candle in their favor, and then momentum picked up for the bears, and that was the wrap. Right? They stole the 5. Came back, they retested the 5. Now this is your warning sign, right? So you break the level, you come back, you retest the level, and you fail again. So now there's no telling where this thing's going to go. In the short term, you know, continued downward would be what I would expect. So since we lost a 5, we lost to 618. Next target is 786. After that, you could throw up an 886 and see if you got anything there. But as far as this trade's concerned, the trade was here. Right, the trade was here. So that P came up, and this was your indication to get in the trade. You came down to the 618. You could have made that rip, and that's a wrap. So as far as this guy's concerned, there's not too much to look at least not on the hourly chart. Go back to the daily, and we can get a bigger picture on what's going on. See if we're painting any patterns that look pretty good. This is too close of a call, you know, even for something like a Gartley, something similar to that, because that retracement is probably more than an 886. This could be similar to a 618, so we could do something like this, come down, and yeah, so you got a 618 retracement more or less, but this is going to be, yeah, that's way too high. So if this was an 886, you know, then you could be looking at something like a bullish Gartley. Now that's a, let's see, all the way down, that's a 665, which is too bad. So a 786 is standard for a bullish Gartley. So if you were able to get a 786 down here, but again, this would be too high. So if you had an 886 or similar thereof, right, then you could start looking at a pattern like this. And at which point that pattern would have told you, you know, long. But it didn't even realize, which is too bad. Similar to the Gartley that's going on Bitcoin right now. So, ooh, wow, that didn't work out at all. Okay, XBT, USD, perpetual. So I'll show you the daily chart. I've been looking at this thing for quite a while now. Just doesn't want to seem to fail, which is awesome. So coming down on this low, that was that should have been 31.21 down here. Yeah, so that's the 31.21. So that was actually the low of the year for 2018. You know, we can officially say that now that it's February. Yeah, you could have said that January 1st. All right. This move up here was a nice big move up. Right, we retraced down to a 618, right, or very similar to. Came back up, so like I was saying, 886 down. It's an 836. That is close enough. It's within tolerance. So your target from here is a 786 coming across, and we had that. I just moved the D because we ended up painting another low. I mean, I should have left it where it was, but it was basically this wick from this candle here. We tried when this came down here, but it was close. We were going to let that roll, and then we had the sideways action and drop down. So it was like, wow, this is an actual candle. So now we have a much better pattern. And from here, so once you have that low, then you would set your targets. All right, so we set our targets up, and I think we're looking at 4,400, probably this line right here. And that's based off of, you know, advanced ABCD patterns. So if you can see that purple line here, right, A, B, C, D, and the theory behind that is the move from A to B needs to equal the move from C to D, and in this pattern it's AB equals CD or plus, right? So as long as you have ABCD as the minimum, you can always go more. Now, of course, Bitcoin is always super interesting and loves to paint patterns. So we had this this falling wedge over here, and we just broke through it today. So always very exciting when you get some volatility in the market. And here we go. So this guy, I understand the chart's super messy, so I apologize, I guess. I like clean charts, but, you know, sometimes things happen, and things happen on this chart, so sorry. If you can get around all the stuff in your way, then it'll be a little easier to see. So this right here, we had ourselves falling with 1, 2, 3 touches on the bottom for the support. coming along the top 1, 2, and we missed our third. All right, so which is a shame. I mean, obviously we got it today, but that's on the breakout. So for falling wedges, generally you want to see a breakout between 50 and 75%. Now I don't really have a way to calculate 0 to 100 over here, so I just visually do it. And if I'm standing back in my chart, I would say, you know, right about here is the 50% zone, and maybe right about here 75. We're definitely within that range, which is good, and we had a massive breakout to the upside, so that's fantastic. Now from here, just like we did on the other chart, you know, you had that big impulse move up, so now you have to start waiting, say, all right, well, are we coming back? Are we going to retrace? Or are we just going to keep pumping? So we had a pretty big sell-off at this top level. Top level sitting at 37.28. We ended up coming down 236, right? Is actually currently where we're trading. We traded as low as, yeah, about the halfway mark between 23 and 38. So we'll call that, whatever, like 33%. Came down, and now, you know, we have buying coming in. So buying's coming in, pushing it back up. We'll see if it goes sideways, if there's a struggle. This is my target zone here on a pullback. So I'm looking for the 382 for this particular move. I feel two things about this. One, the Gartley is playing out as up. Two, we have the falling wedge is also trading out as up. Right, so there's two areas of confluence to tell me long is okay. Volume is good. It's above average. Average right here is the orange line. So average is $840 million, and well, the current candle, yeah, of course, the current candle so far is 232 million, but the current candle is tiny. So overall, pretty good. I'm cool with that. LB PG. Is there anything you want me to go over? Anything? Is anything nagging you right now? Anything that you need to focus on? Because we could do something like that. Otherwise, I'll probably rifle through, I don't know, a handful of other charts, and then that'll probably be a wrap for now. So let's see. I'm gonna pop over here. Let me refresh this again and see what we got going on. Okay, so can we draw some fib extensions? Sure. Absolutely. We'll find a pair that's doing something. I'm gonna swing the chart, so I'm gonna get out of the 12. I'm gonna get into the 3-day. Let's see here. Let's go 3-day. Keep that on buy. Let that thing do its thing. Thanks. Yeah, no problem. No problem at all. All right, so we'll get out of peak gains and back into peak gains just to sort it properly. All right, so in the last 3 days, we're looking at big movers here. 86, 72, 53. It's pretty low. 10 million market cap is low. Probably won't mess with this. 16 is still low. Don't really want to mess with that too much. 59 and 49 are reasonable with over 1,000 Bitcoin being traded. So these are something we can look at. Now ARC we already took a look at. So we're cool on that. HCBTC, let's see what we're looking at here. So daily sideways, right? A straight sideways, gray. So not good. We have to look at the other longer time frames. 6 and 12, sideways bullish. Now we're trending on the 1 hour. Right? We got a strong uptrend on the 1 hour with a sideways to bearish trend on the 4 hour. So this could be good right here. This little combination coming from the 1 to the 4. So if the 4 is slightly trending down, but you have the 1 hour that's trending up, eventually, if the 1 hour maintains momentum, which it has support by the 15, the 5, and the 30, then this, we would think, would change to green, and now you're looking at a decent setup to convert sideways into something worth trading. So 43% in the last 3 days. We came down 56% from that gain already. So let's take a look at this. HC BTC. HC. I'm not familiar with HC. This is a project I do not know of. Hypercash. All right. Let's take a look at Hypercash. Again, I go through my motions. Everybody's different, but I like to get history. I like to get an idea of what this thing looks like. What type of coin is it? What we're looking at. That's all. Now, I don't want to go into a trade completely blind, so I just want to see what's going on here. We listed on Binance, right? It was an instant drop like every other coin. We leveled out for about a week. Not much trading, not much going on. 9% moves, and then dropped and dropped. Sideways drop, sideways drop, sideways. This was a big candle, and we gave it all back. But here's the important thing that I see on the weekly chart. You gave it all back, and then you went bullish again, and look where your low was, right? So this ranged area here, your low went back to a previous market structure, which is this right here. So now it's good. We didn't make another lower low. Okay? We didn't come back down here. So that's a good thing. Now, temporarily, we could do something like this. All right, and say, all right, what kind of trend we got? Let's throw that on the daily and see what we're looking at. So you want to look at fib extensions. So for fib extensions, we want to get an idea for what kind of moves we're making. So you're looking for target areas from the 127 to 1414, the 1618, 2618, 3618, 423, 8. Yeah, well, all the way down the line. So let's say this move right here. So we have our bottom, or our temporary local bottom from the trading that we have. So if you were looking at this chart and you said, okay, this is what we got. All right, this bottom came in, had a nice spring back. Look at that. So you sharp down, the nice spring. Nice spring. So basically this level was rejected. It was instantly bought up. Said, no, buy, 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 buy. We can't make it over this level. Sell, 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 sell. But I'm not willing to sell it any lower than this level. That's what the seller said. The seller said, get out of here. Tough. If you're not willing to pay for it here, I'm not willing to sell it, and we'll just have a standoff. Fine. Buyers came in and said, all right, fine, you win, we'll buy. So they bought. And now this right here is a pretty good symmetrical triangle. So this would have been an idea, relatively speaking, if you were to trade that breakout. So this move is the move we're concentrating on for this example. All right. So I know it's hindsight, but I just want to, if we want to talk about extensions, then I'm going to show you extensions. So this move you would have been alerted on 1, 2, 3 days. So we're talking 1, 2, 3, 4, 5, 6. So 6 days from the bottom of this move here. These two big candles, right? You would have had that. You would have also had in the 3-day view 1, 2, 3. So this is something I would have seen based off of coming in on peak gains, right? So you would have seen this big move here and this retracement down. So since that's something we would have seen, let's take a look at it a little closer. So we'd be on something like a 3-day, which is what we're looking at here. And we say, all right, within that 3-day period, we had a pretty significant gain. So we're going to come down. We're going to say, all right, gains were at 36%. So 36%, we come down and we say, all right, well, let me draw my fibs. So we're going to take the bottom, which is this candle right here. We're going to take our bottoms and we're going to swing it up to our top. Now that's it's not as accurate as it should be. That's better. Let me get rid of this guy. Excuse me 1 second. had to clear my throat. All right, so we got a nice peak up top. We came down, retraced, 382, hit, lost. The 50, hit, lost. 618, not hit. All right, so if you layered your buys, 382, 5, 618, ballpark, you know. So if you layered your buys, let's say you took the 5 and the 618, you'd be in at the 5. You would have never got filled at the 618. All right, and as a trader, that's fine. You got one order filled at the 5, and that's what you're looking to trade. So what are your targets? What do you do? How do you get out? Well, you know, you just took a trade from a peak down on a possible reversal, but you failed to even make a higher high. So it's already a little nervous. You know, we haven't been able to get over this level, and you got a big peak here. So couple that with a few things. Now, this is a low cap coin, so volume is disgusting, right? So you're not going to have a ton of confluence here, but the confluence that you would go by, or at least I would go by, is the double bottom. All right. So double bottom, I'm looking to at least retrace back to the top. So I would say on a smaller trade, I'm looking to at least get this level back from this pullback. All right, but I could set higher targets, and I could do that two ways. And I'm going to do this. So I'm going to take my fib, right? And now I know, based off of this move, right, this guy right here, okay? Based off of that move, the 50 was hit. The bottom of this candle was the lowest it went, close to the 618, but not. So all I'm going to do is I'm going to just reverse my fib. That's it. I'm going to take to the bottom that it went down, so that's the finished pullback, and then the top of where the peak was. All right, and I'm just going to drag that over. Now, obviously, you can go into settings and just hit extend. I typically don't use the default fib, but I just finished a webinar and I wanted to keep things, I don't know what the word is. Want to keep things the same, for everybody, so that they could just pull it up and everything would look the same. So that's why it's still on here. Anyway, make a long story short. Now we have targets based off of this move and that pullback. Now we have targets. All right, we have our 1, and our 1 is our full retracement, right, back to that previous peak high. Our 1618. Okay. Now our 1618 didn't get hit on the next leg up, but it certainly got hit down the road. 2618, that got hit. 3618, that got hit. 423, that got hit. I mean, they all got hit. we could probably bring that into the 12s, and that would still get hit. So you could do it. You could do an 823. Let's do it. What else are we doing right now? Right? Let's do it. So let's put an 823 in here, and let's put a 12 in here. So let's see. Do an 823. And let's do a, okay. All right. So you didn't hit the 12. Let's get that out of there. So you didn't hit the 12, but you hit the 823. It's pretty insane. Now, if this was a high market cap coin, something that I knew I wouldn't have liquidity issues with, something that's a little bit, I guess, more respected as trading, you could sort of narrow that down to high market cap T10, T20 coins. Not so much even the project, but more the trading volume, the interest in trading, the pairings, the whole nine, right? Coins that you're not going to have problem getting your orders filled. then a move like this, I would set these targets up. All right. And even though this was a long trade, you know, we're talking, we're talking the middle of December to the second week of January before you hit your first target of the 1618. That's a long time to wait. You know, you don't necessarily want to be in a trade that long. But it panned out. You would have hit your 1618, your 2618, your 3618, and your 423. Now, if you're setting targets higher than that, you know, I mean, good luck. But in this particular scenario, you would have made it, which is great. But yeah, that's a tall order. It's a lot to ask. But within this move, so we'll call this the trend. This is the new trend, right? This is the new local up. You got a low, you got a high, you got a higher low, you got a higher high, you got a higher low. Of course, you got a higher high. You still got a higher low. Now you got a lower high. So right here it failed. So what I would do on something like a failure like that, now I don't love this wick, and I don't really love this wick, but let me just get an idea. You have something like this, and yeah, it's too sharp for me. It's there's like no slope to it. It's just too sharp. But generally speaking, you fail to make that next high, I would connect the 2 points and then look for a breakout of that zone. But this is it's just too disgusting. Let's see if we went by bodies. Yeah, I mean, that's even worse. So forget it. Just get that out of there. But yeah, you'd be able to pull these targets. Now there is, right, because we're only using 2 anchors. We're just using the 2 anchors from the pullback, right? This is all from the pullback, that initial pullback. You can use a fib extension as well, which would give you the same deal, right? So fib extension is just 3 moves, right? And then you're back. So you take the pullback, you take your high, and then you come back down, and you have the same targets. Somebody asked me earlier tonight. They said, "Well, why don't you use the extension, or why don't you use the fib extension tool in the examples that I was doing the other day?" And there's no preference. I mean, you can and you can't. But this is an anchored 3-click, and I don't need it for this move. Now, if I were going to use fib extension and trend like it was designed, I could do something like this, where I would be coming down from the bottom and then pulling back. Okay, but you see how different these targets are, right? My targets are like this. Right. See the difference here? The difference is, right, we're pulling our targets based off of the pullback, not off of the overall trend. Let's see how that would have worked out, right? The 127, yeah, perfect. Stopped out of the 127, 1414, easy, right? You would have picked that up. 1618, yep, no problem. Now where'd you stop out over here? So you would have gotten the 2618. You would have gotten the 3618 is actually fantastic. That's fantastic how that lined up. And you would have gotten the 423. So yeah, benefits both ways. For me, it's just easier for that particular extension because that's the move that I'm doing. So since I already have this out, I've already measured it up, and I have this, and I say, all right, what was my pullback? So okay, well, we're just about between the 5 and the 618, and then all I got to do is this. All right, it's already on the screen. It's just 2 clicks, and then bang, I got all my targets. So I could drag this over, scroll this back up, and now I have approximate zones where I might be taking profits. That's why I was confused. The levels are different. Yeah. So the levels are different. Well, they're not. Okay, so let me do this. The levels are the same if your coordinates are the same. So if you use the fib extension tool, just as I did flipping the fib, then there's no difference. All right, so pop this over here. Oh, yeah, of course, I did it backwards. So pop this over here. And again, so that's my 0. Okay, and the overlap. All right, they're the same. 2 6 1 8, 3 6 1 8, 1 1 4 1 1 2 7 2. The only difference is you can use the fib extension tool differently than you can with the regular Fibonacci retracement, meaning you have 3 anchors and you can use all 3 at different levels. So you go bottom to trend, top of peak move, bottom of the pullback. Now your targets are going to be very different than what we had earlier. Okay? So, that is when you're going to see a difference. Yes, okay. Very good. So, what I do for these targets, for a trade like this, my targets come here. Okay? Now, I base my fib off of the whole move. This one big move right here is a big impulse move, right? So the one big move up, I'm trading the pullback. I'm measuring the pullback as what can I reasonably get back after I've lost. So let's say it hit the 618. What can I reasonably get back from the 618? Right? And the golden ratio, right? The 1-6-1-8, right? That's what you should be getting back from whatever that pullback was. So if the pullback was 50%, then I'm looking for the 1-6-1-8 of 50%. If I'm at the 618, I'm looking for, a 1-6-1-8 of the 61% loss that I just took. So I want that gain back to 100, and then from there I want to be able to get up to the 1-6-1-8. Reasonably, reasonably speaking. But we can use, the retracement tool or the fib extension retracement tool for different types of trades. You can use it for, mechanical entries based off of something like big move down, big impulse move down, right? And then the retrace up. And now you got what happened here? Where's my stuff? Oh, it's I'm sorry, it's just too big. It's too big to get my short entries. And then you'd be able to pull in something like this. This is a terrible example because obviously nothing was hit and we didn't really go short. But mechanical trades are set a little bit differently. This one did not follow any of the rules, and therefore it was a bad example. So I apologize. But a mechanical trade, you want to break previous support resistance zones, usually 2 of them. But they call interior and exterior, so really 1 within the trend, and 2 outside of the trend, and then you would set yourself up for longs and shorts that way. So that's something we could do. We could do another night. But yeah, so that's a fib extension. So from there, you would have your profit target. So if you were to stay in this whole trade and say, all right, well, I'm going to pull profits at the 1-6-1-8, the 2-6-1-8, the 3-6-1-8, and I'm going to be out of my trade completely at the 4-2-3. In this instance, that would have worked. This would have been a little nerve-wracking at the time because this area is not great. All right, you're in a long. You haven't been able to get past this zone, this area here, and now you're sideways, right, for who knows how many days. Too many days. Too many to be happy with this trade. Did it work out for you? Yes. Okay, but it's not always going to work out for you. And so at that point, you set your stop losses and then you move on. What looks good. That's it. I try not to get hung up on trades, and I'm okay. I'm okay losing a trade as long as it followed my rules when I took the trade. So if I take a good trade and it just doesn't seem to pan out, then that's fine. No one's expected to win 100% of their trades. That's insanity. But I don't want to break my own rules, right? And I don't want to break my rules and win a trade, right? It sounds crazy, but that's a bad habit. and to not learn from that and to think that, well, I could bend the rules this time and I'll win a trade. It'll be good. I won't develop a bad habit that way. I mean, it's just not true. At least my personal experience. I don't want any bad habits. What I want is a specific set of rules on which I trade by, and if it meets that criteria, then I'm cool with it, right? It gets the seal of approval. The orders go in, and what we let price action dictate what happens next. If it's a winning trade, that's fantastic. Book your profits, and I'm out. And if it's a losing trade, then what did I learn from it? What went wrong? Is there anything I could have done? Throw it in the trading journal and learn from it. You know what I mean? If there's something that you did you rush the entry? Were you impatient? Right? For the longest time, I'd find a trade, I'd set my targets, and then forget about front running it. I would almost market buy. I just want to be in the trade. Let's go. I don't want to wait for it to come all the way down. And then what would I do? I'd buy up here. Yeah, listen, made every mistake in the book. That's how I learned. You know what I mean? I made every mistake you possibly made, I made. And you can make mistakes and not learn from them, and then you're just doomed to repeat them. Or you can make those mistakes and learn from them, and that's what I did. And I took a sip because my mouth is dry. So, I'm glad you like that. So, do you have anything else? LB? I don't know if you want me to call you by your other name, so I'll stick with LB. I'm going to dox you on YouTube. Are you cool on that? Are you cool with the extensions? I'm going to pull up, I use this example for the last 3 weeks. Hot BTC is just such a classic example. So let's see. It's okay. Can we go through new coin? Yeah. There you go. Hot BTC. Yeah. Everybody's sick and tired. Well, I don't even remember what we were on. Some no name coin. Let me get rid of this. All right, check it out. Hot BTC. Now, this is ideal. All right, I can't stress this enough. This is an ideal setup. This is a terrible chart, by the way. I'm just throwing that out there. And a little disclaimer: if you do want to trade something of such low sats, you're better off on an ETH pair. All right, like I was talking about before, resolution, zooming in. Right, same thing with sats. Right, there's very little give between one sat. So between 14 sats and 15 sats, you get candles that look like this, and it's ridiculous. But if you were on an Ethereum pair, then you would see how different it is. So hot ETH, and let's put that. Now you have a range, a much bigger range, 989, 990. Now you have 1,000 bits of something to move around, as opposed to one, and it makes such a dramatic difference. So whatever, we'll stay on. I got to go back to the other one is just, it's so good. So it clearly demonstrates an ideal setup. And let's take a look at this. So what I like, what a lot of people like, is this right here. This right here. Okay. Range trading, accumulation, consolidation, sideways, an equilibrium between the buyers and the sellers for an extended period of time. And I think I measured this before, and I think it was 54 days. We don't need to measure it again. We're on a daily chart. It's a lot. All right, you're basically going from the middle of November to the first week in January. So it's a long time. Now, the big move. The big move. In 3 days' time, we went from 11 sats up to 18 sats, closed the candle at 17 sats. So, I'm going to measure this. And I'm going to go on bottom, top. 64%. Now, the next day, right? The next day, we made another higher high. So we have to incorporate that, right? We can't just, you know, we have to let trading settle somewhat before we get the drawdown. But we would have been right here at this zone, would have been alert to what was going on. You know, like everybody in any type of trading, when you have, you know, big moves, 82% in a few days, everybody's talking about it. You can see, obviously, volume came up. So this move, 82%. So, and we're coming out of range trading, accumulation. All right. So this is a very obvious setup. So yes, I like the setup. I'm going to take my fib tool out. I'm going to go to bottom, to the top of the move, and I want to take a look at targets. So right here, on this day, right, you would have been looking at, all right, let me draw the fib out. Let me see what I got going on. You close that candle down here. Remember that, right? You close the candle right here. So now you can draw your fib, right? On on the very first trading of this candle, right? This closed, now you can draw this fib. So now your fib's up, and you say, all right, well, maybe between the 50 and the 618, I'll go down to the 786, you know, in case we get trading down there, but I'm out, you know, after that. Super tight stop. Let's not do too much. Right? So it popped up, we're out of range, right? Trading popped up out of range. It came back down. It hit the 50. You would have gotten filled here, and it hit the 618. Right? So you would have gotten filled here. And it even traded a little bit lower than the 618, but obviously never made it to the 786. So now you're in the trade. Okay? You're in the trade. You need profit targets. Okay. So just like we just did before, we're going to reverse the fib. Like so. And then we'll just drag it over. Alright. And I'm lining the one up with, you know, the top of the move. Alright. And obviously I'm lining the bottom up with the top of the move. Now, if you want to be very accurate and very specific, throw the magnet tool on here, and then just extend your lines. All right, so you go over here. You want to go to settings, and when I extend to the right. That's just what I do. And now you can use the magnet tool, so it'll snap right to it. And then you come over here and it'll snap right to it. Okay? So now you know you're 100% accurate. Okay. So you would have set your profit targets. Now because it's the first move out of range, you could try to book the most profits because there's interest in buying and you just broke out of consolidation. So it's one of the larger moves you can make, as opposed to taking the next pullback, the next pullback, the next pullback. As you get more and more of those within the same trend, you have to start getting a little nervous that, you know, you're running out of steam or the trend is getting exhausted. So now you put your profits on. Now remember, you just got hit. You're right here. This is where you are. January 10th. So January 9th, you said, I'll draw the fib because I'm starting to see a pullback. You know, let's say right here it's already pulled back 15%. Okay, well, take a look at the chart. See what you got going on there. You pull the trade, you picked it up at the 618, you're cool. You end up taking your profit targets out and you say, all right, well, this is the first big move coming out of range, but, you know, I'm not super in love with this trading pair or this coin. I'm going to take profits at the 1618. I'll put a little bit at the 2618 and just, you know, a tiny little Hail Mary over at the 3618. But I'm not playing the 423. Well, you would have hit your 1618 within about a week. Another drawdown. Another pullback. Bang. You would have hit the 2618. Another pullback. Bang. Shot right through 3618. So that would have finished your trade right here. You would have been out, and other people would still be in. They hit the 423, continued on, and then started selling. Now you can get an idea on how you can make, or how you can at least set those profit targets based off of something like this. That's a big move out of accumulation. So it's a unique situation, but it's great for where we're at right now, because there's so many coins that are currently painting new lower lows, and if you're able to get those types of profits, I mean that's fantastic. Now the bigger picture is this right here. Okay, so hot over the course of this new trend, right? And we can call this a new. Well, we can just call it an uptrend, right? So you have a low, a high, a higher low, and a higher high. So we'll just call it an uptrend. We're painting ourselves our first big trend pullback. So we're on the daily chart. Trend is up. Just draw the big fib. Pullback to the 5. So far. So we could say if we wanted, let's say that we had a buy target in between the 5 and the 618. And with that buy target, we're willing to go in on a long. And we don't 100% know, you know, where it's going to go next. So in the meantime, you just say, well, let me just take the middle of the zone, and if it is to do anything, then I'll have some profit targets to look at. So let's just say give or take, right? These would be the next set of profit targets. And why can you do these, the bigger ones? Because this is a much bigger move. So this is the first big leg on the daily. Right? Now, we were on the daily before, but we already played the small impulse moves. So consider these little moves in here and these little micro moves, and consider this the real move, right? That's the actual big move. So then, now you start getting the idea of, okay, well, if these tiny little guys represent what this big little guy could do, then you can realize the kind of gains you can get from something like that. I don't know why I can't move the chart. There we go. And for that, you could do a bunch of things, right? You could do an ABCD. So you're saying, well, you know, you go A, B. Let's say you're about halfway down here, right? C to D. So 1, 5, 6. So like 1, 4 and change. Right? And then you get a profit out of, or a target out of ABCD. Same thing with. Well, we just talked about Gartley patterns, right? So if you hit the 618, then eyes are open for some patterns, you know, or at least a Gartley pattern. But you also have a crab and a butterfly and a deep crab, a cipher. There's a whole bunch of patterns. So it's cool stuff to know. So, but yeah, anyway, I like this example really well because it demonstrates fib extensions, targets, entries. Stop losses again are such personal preference and really based off of how much what your risk reward is looking like. But the easy way to do it is go by the next fib that you're not willing to trade lower than. So if you're buying at the 5 and the 618, you might say, well, your 786 is your stop loss. Other people go for structure, right? So this was a high before a low, right? So this high can get retested, and for that, if you go any lower than, you know, the first couple bars of trading, then you're out. Others will go to the swing low, which is actually the 786. So then you get the 786. If you use MAs, it should have the 7 EMA crossing the 20 SMA, would thus indicate a lower trend forming. Let me read that back. If you use the moving averages, it should have the 7 exponential crossing the 20 SMA, would thus indicate lower trend forming. Lower trend forming. Well, okay, so you got your exponential and you got your simple moving average, but well, no, I got that. Would this indicate? Oh, okay. Would this indicate a lower trend forming? Well, all right. So you're taking a fast exponential, and you're taking a somewhat fast but still slower than a 7 simple, and they're crossing. Well, which way are they crossing? If they're fast, all right, let me throw some enemies out here. Okay. We'll just look at what we got. Let's get rid of this. Let's get rid of this, and let's get rid of this. So the legend here is blue, orange, green, brown, slate, white, red, yellow. That's how these go. 18, 13, 21, 55, 100, 200, 500, 700. That's how mine are set up. All right, so whenever you have consider the fast moving average. So for you, it would be the 7. So whenever you have a very fast moving average, that should be with price, right? And if you're in an uptrend, it should always be support, and if you're in a downtrend, it should always be resistance. That is your first. Let's say you're in war, right? And you have lines of defense, the front lines, right? So this is your first line, right? You break this, and you move on to the next guy. So for me, I guess I should probably type this out, right? So for me, come on, there we go. So so blue. All right, hold on, let me do this. 8 is blue. 13 is orange. 21 is green. 55 is brown. Where are we at here? Okay. The 100 is slate. The 200 white. Yes. Do we even see that on the screen? I don't even see the white on there. So we don't have to go any further than 200. All right. So now I don't want to confuse. Oh, there it is. Not enough history. Okay. So whenever you have your fast broken, like it was right here, right? Trading took over. You flipped it, right? You flipped from support. Now it's resistance. Now you're trading through it, right? It's not doing anything. And now over here you have support again. Now over here it's resistance again. And right here currently it's resistance. So when you have your fast, okay, cross under a slower, your 13, and that's bearish. Okay, when it's the other way around, and let's find an example of that. Although this is a little tight over here, but let's see what we can find. Come on, chart. Oof. Do your chart duties. There you go. All right. So when you have the fast, which is this blue guy, cross over a slower, that's bullish. And what it did was it crossed over the 13, the 21, the 55, the 100, right? These were all indications that things were happening. Good things in a bullish way were happening. And you can see during the uptrend, it acted as support, at least your fast one, acted as support, cut through a few times, but you're still closing above it. Closing above. This was risky, but you're closing above, closing above, closing above. All these candles are closing above, closing above, closing above, close below. So you would, if you just played MAs, you'd be out of the trade right here. When that candle closed, you would have been out, which is a shame because you would have had a little bit more here. So, you know, if you played off the 8-13 combo, you'd be okay. A popular combo is a 20-50. I don't use a 20 or a 50. I use a 21 and a 55. But for me, that's, again, personal preference. That's the cool thing about trading. You can sort of personalize everything so long as it makes sense for your trading. Does that make sense? Did I answer your question? The big ones are the 50 and the 200. Right? So you get a 50 crossing coming from underneath, crossing above a 200. That's your golden cross. And the opposite would be a death cross. And that's now remember, these are lagging indicators. Okay, the moving average is a lagging indicator. So you get a cross, right? Sometimes that trade is already built into current price action because you know you can see it happening, and other times it's quite the opposite, which is what it's supposed to be because it's lagging. So you know you end up having the move already happened. Right, and then you get the cross. Right, so they like it. You know, you got the indication after the big move, so it doesn't always work out great. But you can see how well just riding the 8. I mean, it's a style of trading. You could trade just off MAs if you wanted to. It's a style of trading where you'd never catch the bottom and you'd never catch the top, and you have to be okay with that. And I'm okay with that. I'm okay with trading the 80% of the meat in between. But, you know, it's something to look at for sure. Does the trading room app use specific MAs to determine trends? I don't know how the app determines trends. That's on the developers. So, however they decide what equals a sideways to bullish and a sideways to bearish and a strong bullish or just sideways, that's their secret sauce. You know what I'm saying? So yeah, I don't know. You know, obviously it goes by, you know, some type of data, something that is being seen on the chart during that time frame. So what I did was I studied, or not studied, I spent a lot of time with recognizing, let's say I go to an hourly and I go and I click it so that it's showing me bullish. And right here, so I would say on the hourly what's bullish, and I would open up all these charts and I would see, all right, you know, do I agree? Is it? And yeah, you know, I did. The trends were correct. So with the sideways to bearish and sideways to bullish, right, there was definitely some lean towards the bullish or bearish side. So it could have been nothing more than just a handful of candles, but they were painting a picture where it was just slightly down. So this right here is just slightly down based off of candle close, right? That's how I would look at it. So yeah, I mean, you know, you're slightly down. All right. For me over here, and once I have the chart in front of me, for me, I say, all right, well, this is a range. I'm calling this sideways all day long. Now I don't know what the app didn't come out until whatever, somewhere around here. So I don't know what this was considered. I would imagine it was sideways, but it could have been all light pink. It could have been sideways with a bearish tone because it is trending down. Okay. Cool. Cool. All right. I think that's going to wrap for myself for tonight. I'll be back at some point tomorrow, maybe a little bit during the day, but I'm definitely targeting the daily candle close, which for me is 6 p.m. Central Standard Time. And thanks for joining me. I really do appreciate it. I hope you got your questions answered, and we'll always carry on sometime in the future. Until then, get yourselves on the exchanges, and well, you know, be careful. Trade at your own risk. Your UTC +4. Oh yeah, that's quite a difference because I'm UTC -6. So yes, that is quite a difference. Oh, Ed, all right, hey, great video, thanks. Xavier, hello, hello. Everybody's all quiet until it's time to go. Well, I appreciate you guys being here. I really do. 10, yeah, 10. Well, yeah, you're +4 and -6, so that's a big difference. So for me, it's 3 o'clock in the morning. So for you, let's see, you're plus, right? So you're 1 o'clock in the afternoon. Is that right? Should be. I think my math is right. Hell yeah, soaking it up. All right, Ed, that's what I'm talking about. 13:08. Oh, look at you, military time. Yeah, so 1:08. Very good. Yeah, all right, cool. Well, I'm glad you guys were in here. You guys were a little quiet in the chat, but that's cool. LB had some things roll through, so I hope everybody learned something. If not, then we will learn something tomorrow or the next day or whatever the case may be. All right, until then, I will see you guys on the exchanges. Be careful and happy trading.